I know Ohio is a major focus, obviously one of the most valuable economic markets today, and I think a lot of regulation that's going to prevent kind of the rapid price compression that we've seen in some of those other markets. I know you've almost finished executing on your Ohio retail expansion strategy. I'm just interested, how do you look at kind of ROI or payback math on new doors in a market like Ohio?
Well, for us, obviously, we wanted to get to the eight, and we were able to do that. But also, from one of the things that you talked about on the first question is, what's an advantage? Well, for us, an advantage also is that we don't have all of this retail going on all over the country as a large MSO would have. We're focused in a couple of areas. So when we bring on a new door, it becomes accretive to us. And I think that that's a significant thing that we look at. As far as return on investment, we're like most companies. We look at how much assets we're deploying and what the return is on them. We have not established or communicated a hurdle rate or anything that we judge that off of, but basic business principles would dictate to us on that. So we're really looking at accretive, and it moves the needle. So for us, if a store contributes 10%, that's significant to our bottom line and to our top line.
Yeah, I know a lot of us were non-cannabis for a long time, but this is a basic principle in investing in a lot of other sectors, right? Is growth off of a small base is much easier to obtain than growth off of a large base. Once you hit a $1 trillion market cap, or say you have 1,000 retail doors, adding a retail door, adding a million bucks doesn't do anything for you. But with your positioning of, 8 doors online, 10 in the pipe, 10, two more to come, each incremental store is a much larger growth opportunity for you than another MSO. So I think that's where we're seeing a lot of focus on the smaller names, is just the relative growth on a like-for-like basis. So yeah, I think
Well, I
that's
think if you're deploying capital, you're going to look at that, where you're going to get the impact and what, I think that's also the thing with Vext too, is if you're deploying capital, you also look at the structure on the balance sheet of, what that looks like. And I think we've got a pretty good balance sheet right now and have done it the correct way.